Good morning, everybody, and this is your S&P 500 day trade setups for today. So, Congress surprised me. I was expecting them to drag on their song and dance into the weekend, and they actually approved the debt ceiling bill yesterday. So that's why we rallied. We basically rallied straight into this area here, and these levels start coming into play now. So that's the channel, not the channel, sorry, the zone that we should be looking at. There was a gap there in the past, and if you just keep going to the left, you will see there is a little bit of structure inside this zone that we are in at the moment. Today we have data, non-farm payrolls, so you're probably going to find us just hover around a little bit through the start of the day until non-farm payrolls comes out, and then see what happens there. Data is good for non-farm payrolls, and we break through this zone, then we should flip it into resistance, and that is going to give us a pretty solid measured move, and this was a 50% Fibonacci of this last move. So we break above that zone, it brings this measured move into play here. One thing that I would be a little bit cautious about is basically that. So that is a trend line. It could hold us up. It's a channel, or it could be a wedge. It depends how you want to look at it. But for me at the moment, I think the weekly is the area that we need to pay attention to. Let me just get rid of some of the noise. Let's get that diagonal out. And let's just get this one here out. Okay. So have a look there. Big tail, another big tail. Crossover of the moving average. Oh, sorry. Yeah, the moving average is starting to happen, but we are a little bit tired on the oscillators. So could be a channel, little channel. If you look at it on the weekly, not really. We have a potential double bottom here, between here and here. So this zone is very important if we get a weekly close above that. Okay. So let's just drill down through the time frames and to see what we have. And don't forget to hit that thumbs up, comment, thumbs down if you don't like it, and let us know your thoughts. In actual fact, why not just share it on social media? I actually want to do that social experience. But so many of you take long weekends on Friday and don't watch, so I think I'll do that next week. See how many shares we can get on the different social media platforms. That would be interesting to see. Right, 8 hour, nothing. Cup and handle formation, crossover of the oscillators separated, pointing to the upside in a strong area of potential resistance. But we are in an uptrend. On the 3 hour, we're still in an uptrend. We're starting to group the upside on the oscillators. So looking to the left, this is a zone that we need to pay attention to. And I'm just going to fine tune this one a little bit. You can see that is the area. That was pretty much the trade we did the other day. We were looking to buy off there, and we got stopped out. And I mean, you look at it like this. This is the kind of price action that forces you to start trading without stop losses, because 2 days ago you were in, you lost money, and now if you just held on to it, you would be in the money. You know what I mean? Or if you'd held onto it and then just bought more lower down, you'd be in the money. And that is one of the biggest traps that retail traders fall into. You keep looking at those things and you keep applying that logic, and then eventually something happens that it barrels through all the levels, and then you just keep adding to your losing trades because you know you're right, and eventually you get suckered out the market with a huge loss. So it's always best just to take the stop loss, look for the next level, even if it is again to the upside. You can get back in, you make back your loss anyway. Your loss was small, you make it back pretty quickly, and you carry on with life. So just be careful of that. I mean, that's one of the biggest traps I fell into early in my trading career. Okay, down to the hour. So breakaway gap here. You can see we had a gap up, soon as they announced that they'd come to an agreement and patting everybody on the back, and then immediately we had the strong rally straight into the zone here. Kind of difficult to have taken that trade. I did, but again, it would have been a gamble to call it. So I'll show you now why I say that. But it was a really strong move up, and now we're ranging. And I think non-farm payrolls is basically going to be the next bet. So logic says pull back into the 41.98, 4200 area with the data release. Hold that, would be a good area to be long again. And then the other one is going to be a break and retest, but I'm not sure we're going to get that. On the 15-minute, let's just look at yesterday's price action first. So for me yesterday, I was watching this area here, and for me it was, I can't remember the exact time, but it was quite late in the day for me. Let's get this now. So that there, if you look there, that's not really a decent setup. So that was close to 4 o'clock, but you can see this big bar here. So you got a pin bar, not quite on structure, just underneath structure. Then we had a gap up and this massive breakaway bar. Then we came back to test. Now, if you look at the way we came back here, so again, that was onto the level, which was not quite the trade you're looking for. Then you had this breakaway on the 5. We're on the 5 minute now. You see the gap up, reject the moving averages, come back, but here's a big engulfing bar off a level, the 15 minute level, and it is a higher low. So basically, when I saw that, I took the gamble, 150 point stops for a move to the upside. So quick trade, it was happening pretty quickly, so you had to be on your feet. And we got the decent trade. We've had a pullback onto the structure on the 5 minute. So I'll get back to 15 minute. So you've had a pullback here onto 42.15 already, and a nice big inside bar off that. So that could be structure, but you've got a pin bar off here, and I suspect you're going to battle a little bit to get through 42.31, and you've got a, you don't have diversions, so it looks like diversions, but it's not diversions. So probably a pullback back here. There are a few gaps on the way up, so very possible for us to come back to here. So wait for the data. What you're waiting for is you're waiting to see what's going to happen. If the data is neutral, then we'll probably just chip away at this upper level, or possibly just sort of drift lower until we look for the next catalyst next week. But what we are looking for is a weekly close above 4,200. 4,200 should be tested again. Whether it's today or next week is the question we need to ask ourselves. So ideally, I'd like to see 4,200 today, a rejection of that, and then an opportunity to buy and trade back up to this level here at 42.31. There should be a fairly decent opportunity there with a nice tight stop loss below the price action that is formed. Or alternatively, we're looking for a range break, some kind of a retest and a move. But if we get a range break here with the data, it basically means the data is going to be exceptionally good. And normally when that happens, it often just runs away. So we've got positive noise on the debt ceiling. The Fed's comments are kind of they're not overly bearish or overly bullish, but so they are. They did impact this as well yesterday. But I think non-farm payrolls is going to be the one to watch. So yeah, wait for 15 minutes of the first 15 minutes of non-farm payrolls before you jump in, and it's my view is going to be it's going to be to the upside. The question is whether it's going to be a break or whether it's going to be a quick pullback down to here. And often what happens is you print a good number and then it runs down in the opposite direction to find support. As soon as it finds support, then it just runs away again. That's kind of the view that I would have. Not interested in this before non-farm payrolls, and definitely not at non-farm payrolls. So we wait for that first 15, sometimes even wait just for the market to open, because it runs pre-market and then it comes back to some structure and then it continues up. Okay, anyway, that's kind of my view for today. Definitely looking to defend 4200 on the weekly, and if we can do that, it does set up some decent moves for next week, and my chart's just hung. Anyway, that's it for me. Hope it helps, and we'll catch up with you tomorrow. No, we won't. We'll catch up with you on Monday. Enjoy your weekend. Cheers for now.